Everybody, hey, welcome to this episode of the Note Closure Show. As always, Scott Carson, jacked up to be here with you today. Got this very special guest, and I'm excited about. We've been working on this for a couple of weeks now. Things popping up and down, schedules, all that good stuff. But we are so excited. He's the host of the Texas Real Estate and Finance Podcast. He is an amazing mortgage expert, just an absolutely rock solid god of knowledge when it comes to getting shit done in Texas and beyond out there. Yeah, exactly. He's great at helping people and educating themselves. He's a great wealth creator. He's got a pretty interesting career prior to getting into mortgages, but he has been a branch manager for quite some time now, specializing in DFW and Texas real estate. Mike Mills, what is going on, buddy? How you doing today?
I'm doing great, man. How are you? We're in opposite parts of the state, but I'm just glad that the rain has subsided, at least for the moment. I think we're about as flooded out as we could possibly be up here in North Texas. And unfortunately, I think we're headed into now it's going to be 1,000 degrees for the rest of the summer, which I'm not looking forward to that either. But hey, I guess we get extremes and that's it, right?
Amen to that. The heat dome is already here, man. I was out walking this morning and, I was like, oh, I'm going to have to start soaking my shirt in water before I go for a walk, so it's not so bad at the end of the day. But hey, I saw you on an earlier podcast sporting that Dallas Mavericks at 77 shirt there. Good things for the Mavs versus the Celtics. Who you got and how many games?
I'm very excited. I have the Mavs, of course. I'm not going to pick against the hometown team. I am going though in 5, in maybe 6, probably 6. Really, it's probably 6, but my reasoning is that if you look, and there's memes all over the internet if you're following the stuff that show this, but the path for the Celtics to get to the finals was wrecked with people, injuries, being out, not being able to play. It wasn't very difficult. No. Look, they're the best team in the Eastern Conference by a mile, and they have been the whole season. So they're in the finals, like they're good, but their road to get there was very much easier than the Mavs. And the Mavs had to go through some pretty stout competition in order to get where they were getting. And the trade that they made at the very end of the season, and their record from that trade until the end, is better than the Celtics, by the way. Yep. And they're a different team. They're a better defensive team. When they showed a stat the other day that had the number of alley-oop dunks that they've had in the final or in the NBA playoffs, and like the Mavs had like 34 and the next closest team had like 8. So, I mean, it's just, they're a completely different team. And it's weird to say that when you just add a few players, but they're so much better defensively, and they have such an extra layer of offense that they didn't have before, that take a little bit of the pressure off Kyrie and Luka. But, when you look how Kyrie came out in game 1 against the Timberwolves and literally shut them down in the first, that was the game that ended the whole series. Really, the first half of that game shut the whole series down. And the Timberwolves weren't the same since. So I got a feeling that something like that is going to happen in this first game. I'm stoked about it tonight. I can't wait. I had to wear my t-shirt to promote my show, but yeah, I had on my Mavs gear and was ready to rock.
Hey, there's nothing wrong with it. It's all about getting hot at the right time. Besides Mavericks being hot, it being damn hot, 100 and FU hot in Texas, basically here for the next 90 days. Yeah. Let's talk about that real estate market here in Texas. And definitely it's a little bit different. Obviously, DFW's hot, Austin's hot. There was a price index that came out today by First American Title, or it actually came out about a week ago, talking about how you have the median home price in specific areas and then the buying price, the buying power price, and how the buying power price in Dallas and Austin is both above the median sales price. You're by about $20,000 to $30,000.
Yeah.
You're as a mortgage banker, mortgage broker in your neck of the woods. How difficult is it to get deals done these days compared to 4 or 5 years ago, Mike?
Getting the deals done isn't tough. I do want to say one thing about the median thing, though, because I think a lot of people this gets reported a lot when they talk about median home sales and how they fluctuate. And obviously it's a relevant number, but what gets missed in that is that what the average person I don't think understands about median sales price is that's a mix of sales, right? So when you're in a market where we're in right now, where the houses under, say, 500,000. Now you're in Austin, price points are a little higher in a lot of areas down there, but let's say under 500,000. Well, those homes are still moving at a pretty solid clip. Yep. If you're buying a 3, 4, and especially if it's under like 4, those houses are moving. The homes that are sitting right now are 6, 7, 8, 9, $1 million. Those houses, the appetite for buyers is not as high. So when people show median sales prices and where they are, it's not the average value or the average cost of a home. It's the average home being sold in that market at that time. And if you have a high rate environment and you don't have a lot of higher end homes move, then your median sales price is going to be on the lower end until that starts to change. So when you see homes go under contract and they're being purchased, you can still have that separation because it's just the mix of homes that are being sold. So that's
love it. I'm glad you brought that up because it's true. It's all skewed in how you look at the numbers and what's being measured. It's kind of like they say, oh, inflation's only 5-6%. Well, depending on what you're buying, it can be 11, 12, 13%.
It depends on where you started, because if inflation's been 5% every month for the last 24 months, you're 20% higher in everything than you were. But just in, as far as getting loans done, the industry for mortgages right now is very much in a place where it's not hard to get loans done. Like getting loans done, if you do your due diligence up front, right? And that's a big separation. You obviously you spend a lot of time examining, these different notes that are available that you can purchase and what the positives and negatives are, and if it's a good investment. Well, as a lender, we do the same thing, but for a buyer. I'm looking at the buyer's ability to purchase. And when I talk to them up front, obviously credit, income, debt, how much cash they have, those kind of things. Those are simple metrics. But if I understand what's necessary to get that deal done, then I know the moment I talk to somebody that they're going to be able to close. So, or not, because that happens as well. So in that situation, getting a loan done, if you know what you can or can't do, you're fine. Okay. There's no issues. Now, the rules and how they adjust and what they have changed, but they've only changed since 2008. Right. The adjustment, even since the market's tightened up, the rules for lending haven't changed. They're the same. There's nothing that's adjusted. And that's why, these days when people talk about housing crashes, there's a lot of people that don't pay attention to what's happening and say, okay, well, housing slowed down. People, maybe are struggling a little bit. So there's got to be a crash coming and the foreclosures are going to start hitting the market. Well, no, they're not, because lending has tightened down. But again, back in 2008 and 2009, lending tightened down to the point to where if you do a loan for somebody, for the most part, they're good. They're good loans. The only ones that are having issues right now are things that are like down payment assistance loans. Some of the FHA deals are on lower end credit borrowers are having some issues. But I mean, you knew that going into it. There's a certain level of risk involved when you do those types of deals. And so as a lender and as an industry, we understand that there's going to be some margin in there, 3 to 4% of those deals that are going to go bad, because that's just what happens. That's life. But as a whole, mortgages are performing very well. Our foreclosure rate across the country, not just in Texas, but everywhere, is still at historically low levels. So foreclosures aren't coming. Lending's not tighter. What's tighter is people's budgets and household income and household debt. And that's what is affecting people's ability to buy, is they can't afford the $600,000 house because they have 2 car payments. They have, 5 credit cards. They have 6 student loans. They have all these other things, and their household income just doesn't keep up with. That's what the tight part is getting. And then of course there's the cash piece too, but really that's what's prohibiting or it's causing any type of slowdown in lending.
Yeah. I mean, when you see, exactly like you said, VA loans, FHA loans, those have always had a little higher default rate because people have less skin in the game. In a lot of cases there. So they're less prone to, I'm going to fight this out and pay this first before I've got to take care of my $1,000 car payment.
Yes.
You know what I mean? Cars, I just bought a new vehicle recently and I was blown away by the price.
It's ridiculous. It's absolutely ridiculous.
So I'm not going to pay for a small house buying a truck. You know what I mean? $100,000 Ford F-150 Raptor. I was just laughing at it. I'm like, if you sell it, you sell it. Good for that person, but I ain't buying that. And then you look at the amount of credit card debt going up substantially.
Yes.
Whenever you get over, what is it? The folks at FICO like to say that if you stay under 40% of credit utilization, it's a good thing. That's actually really where the credit companies want you to be. But you start getting above that. 30 to 40, somewhere in there. You start getting above that, which people are doing to pay for things that are necessities these days. That drives credit ratings down. That drives your interest rates up if you're looking to buy.
Yeah. Well, what I think we're seeing is in the credit market too, is it's a little bit of, and I heard somebody put it well the other day, there was a period of time, and I think it's ending now, by the way, but there was a period of time where the average consumer was thinking, and even in the mortgage world and real estate world, we were thinking, okay, well, this downtrend is just for a short amount of time, right? This lull in high rates and everything, it's going to change because we have such short attention spans. Like we don't, and COVID didn't help, right? Because COVID was everything crashed and then everything took off. And it was a scale of like 6 to 12 months that the whole thing had turned around. So when you talk about like people's recency bias in their mind saying, okay, I just went through this thing where everything was in the toilet and then everything came back. So yeah, my income's down a little bit. And yeah, everything's a little more expensive, but you know, it's going to turn around. It always does. I think there was a lot of that going on. I think our federal government did that, you know, because we have
totally
trillions of debt, right? So everybody kind of lived in that world. Well, now we're basically 2 years into this thing and it hasn't changed. Now, I think there is a little bit, there's some cracks starting to form in the wall a little bit. You know, look at job numbers and inflation is coming down a little, but jobs are a bigger concern. But so it is starting to shift some, but the issue is that people then were like, well, I got to keep up with my lifestyle. So I'm just going to charge it. I'll just charge it. It'll be fine. We'll pay it on that. We'll pay that next month. It's not a big deal. Oh, the rate's how much? And that's the other thing. People don't even pay attention. They don't realize that their credit card went from, 12%, which is ridiculous, to 25% until their balance starts jumping up. Like, why is my minimum payment now $300 a month?
Yeah.
Well, it's because you have a $30,000 balance that you spent 10 of that on actual stuff. So, it's this perception or this idea that things were not, or that we're going to get better and that they were going to improve, and they just haven't. And now people are starting to feel the effects. Now, if you got laid off, trying to find a job is really hard. If you are working in a company, if you have a tech skill and you thought, I'm going to go to learn to be a coder, I'm going to be a copywriter, do it. Okay, well, now AI is taking your job and they're not hiring you. And so all of these things are starting to impact us, and we're going to see it start to build up. And I'm sure even in what you see on a regular basis, because you look at this, the world of commercial real estate is scary right now with what's happening. And it's all starting. I mean, it's been building up, I feel like, but it's certainly starting to happen a little bit more and more. I mean, I saw something the other day, I think it was from the Fed, where they said that there was something like 68 banks right now, small banks that were, they didn't say failing, but they were like on the verge of failing. And it's like, oh my gosh, that's terrifying. Now, what does that do? What are the repercussions of the economy? I don't know. But I mean, commercial real estate's having a hard go of it too.
Yeah, there's actually, I think the numbers were like between 53 and 83 smaller banks where their balance sheet losses could cause them to go under, where what they have on paper isn't worth the asset that's under, the underlying asset class.
Yes.
So it's underwater basically in that aspect. Now, if they hold on to it, okay, and if they can't hold on to it and ride the wave out, they may be okay. But for every non-performing loan they have, that causes them to have to buy more or bring more in reserves that they can't lend against.
Yes.
And one of the biggest things we're seeing with commercial real estate these days is that now the banks, especially the smaller banks, which actually finance about 70% of the commercial stuff out there, small banks on Wall Street these days, is that now they're requiring a deposit relationship from the lender or from the borrower. So like if you're going to go to a bank
that's buying it,
So if you're taking out a commercial loan, that bank is going to want you to put your deposits with them so that it offsets the reserve requirements.
Yeah.
Versus just getting a loan, they want to have that relationship so it actually writes it into it. So you're going to see a lot more stuff where you have to have that relationship of some sort to keep the reserves in the house. You just can't have it being shopped around at 20 banks. Well, if you do decide to go to that bank, you're going to have to bring in, the 6-8 months of reserves and keep it on deposit with it in a lot of cases.
Yeah, it's getting hairy out there. And I don't, I mean, look, if you are a fan of low rates and you are a fan of cheap money, then these things are good to some extent. It's going to be, the problem is like, careful what you wish for, because it's going to be really bumpy for a little bit. I don't think, this is my personal opinion, I do not think that we are on the verge of like this massive crash. Okay. No. I really don't. And certainly not in real estate, maybe commercial real estate, but not in real estate as a whole. I don't feel like that's happening. I don't even feel like that as a stock market, as an economy, that we're in for a massive crash. A couple of reasons. One is because the federal government does not want that to happen because it's an election year. So good luck with, that not occurring. Second thing is that there are certain segments of the economy that are performing really well. Like take NVIDIA, for example. The fact that stock is now it's trading at $1,200 a share right now. It started the year out at like $300 a share this year. So that AI section and sector of the market has exploded and is single-handedly, Tesla's a bad example because they're a little down, but Microsoft, Google, OpenAI, NVIDIA, these stocks, 6 or 7 stocks, are holding up the entire market. And I don't see a world in which those come crashing down, because the future of that is very bright. Now, everything else, the Targets of the world, they're struggling right now. There are lots of retailers. So there's going to be, like, whatever crash we experience is going to be very segmented, I think, for now. And then what's going to happen is the federal government's going to come in, the Fed, I should say, same thing. It's going to come in and say, okay, we're going to start lowering rates again because we're going to turn this around. Everybody's going to get real excited because it's cheap money. Don't expect it to get to 2 and 3% rates. That's not happening. They're not going that far. But they are going to adjust, and they are going to cut stuff, and it is going to happen over time, and everybody's going to get excited. It's going to go back up. The problem with that is that I do think, I don't know if it's 3 years, 5 years, 10 years, but somewhere here in the next period of time, there is going to have to be some sort of significant correction. And because things are only going to continue to go up as long as they can until they get to a tipping point. And when you just look at the debt that the federal government has right now, and that the fact that there's literally no way to pay that back, I don't know what that leads to. And that's the biggest concern I see in everything on the whole, is that, interest rates will recover, businesses will recover. But what is the fact that the federal government is carrying so much debt right now? What is that going to do to the underlying economy, to everybody else? And I think that's the biggest threat.
Yeah. And I think you hit the nail right in the head there. But there's a second thing I think a lot of people get so reminiscent about, is the way it is, or the way it was.
Yes.
It was great 4 years ago, economically speaking. Yeah. Were we in a better spot? Maybe we were, maybe we weren't 4 years ago. And I'm not saying it has to do with any president, because the president really doesn't control the economic philosophy. What I'm getting at, though, is that life is evolving, and so many people get so used to doing it as is and not growing, not expanding. Minimum wage jobs were never meant to pay for a family. No. And unfortunately, a lot of folks, well, I'm going to go work at Burger King and make $20 an hour. Well, that's great, but everything now is inflation. It can't afford to be there. You've got to develop degrees or develop skills or work in jobs, because there's a lot of jobs out there that need to be filled that people don't want to fill them because it causes your hands to get dirty. There's other things out there that you have to do to evolve individually. And if you're in an area, maybe to get priced out of it. I mean, I'm in Austin, Texas, one of the most expensive places in the country compared to the cost of living in here. If you can't afford to live here, then you need to go somewhere that's more affordable. And there are more affordable places than Austin, Texas.
Yes.
And that's the biggest thing I always crack up is people, well, nobody's holding a gun to your head saying that you've got to live exactly there. Yes, if your job requires you to be there, yes, but is that job available somewhere else at a whole lot cheaper?
Yeah. Yeah. And my bigger concern, is like, for our industry, and, even though we're on different sides of what we do to some extent, we're still operating in the world of real estate. Yep. You more, a little more commercial, but a lot of residential, because you work with homeowners and trying to help them get back on track. But in the retail lending and in real estate space, because home prices are becoming so unaffordable compared to income, right? That's a real issue that we're experiencing, because, I have the old boomer agents that'll call me and be like, well, when I was started selling, interest rates were 18%. And I'm like, yeah, you're right. They were. But the average home value was $70,000 in 1986. Right. And yeah, interest rates were 18%, but the average home value was 70,000 and the average household income was 35,000. Right. So relatively speaking, those were kind of in line. Well, today, the average home value or the average median home price is $460,000 or whatever it is right now. And the median household income is $75,000. Right. So the spread between those two things is massive, and it keeps growing. I always beat this into the ground about, looking at real estate charts. Somebody's like, is now a good time to buy real estate? I'm like, the best time to buy real estate was yesterday, because go to any housing chart that you can find online, and they all go like this. Every single one. There's a little bit of this along the way, but it's all like that. And so if you are in a place where you can't afford or figure out how to buy, there is no time like the present, because it's going to continue to get worse. And I feel like, and it goes back to my fear of it, is that I think that we're heading into a place where the average American is going to really struggle to be able to afford a home. They already are, and it's
Right.
just going to exacerbate. And then it's going to become like all things have become in this country, which is haves and have-nots. Either you have the ability to, or you don't. And if you don't, you're never going to have the ability to. And that's the thing that's frightening to me, because I make my living off of this. The more people that can buy a house, the better. And that number is starting to shrink. Back to your original question about how is it harder to do lending? It's not harder because of the rules. It's harder because people don't have income, because they have too much debt and they don't have cash. And even I always tell, there's a story. So a couple years back, and this wasn't even recent. This was a few years ago. I talked to a couple that were trying to buy a home, and they were both veterinarians. They had gone to veterinarian school. They went there for, by the way, this is like 6 years. Just if anybody doesn't realize, like it's like going. I mean, you're a doctor for animals.
It's a mini doctorate, basically. So
I don't want to downplay. Like, I don't want to fit any veterinarians out there, but it's expensive and it's long. It's not just what you might think. And so their student loan bills alone at that time were $250,000 each. Okay. They came out of college. They had one car payment with $250,000 worth of student loan debt. They didn't really have very many credit cards. I think they might have had one or two, like everybody, but not a lot of debt on there. They made $75,000 each a year. So their household income was 150 grand, right? Uh-huh. I couldn't get them a house because the student loan debt, because in lending, you have to count, regardless of if you're paying on it, I have to count a certain percentage. I don't have a choice.
Yep.
There's ways, there's income based and things you can do to change a little bit, but no matter what, I got to count something. And so that debt was such a burden on them, and having to count that they couldn't buy a house. These are two people that played by the rules. They went to school, they strapped on their boots, they got good jobs, made a good income, but because of student loan debt, they couldn't buy a house. Now, fast forward, 3 years, 4 years from then, and now that house that they were trying to buy for $300,000 or $250,000 is now $450,000, and there's no way in hell they can buy that house. Yeah. That's the part that I'm really worried about.
Yeah, there was a study that came out a few weeks ago. We did a podcast a bit on it, where if you look at the top 105 markets, 68 of them doubled in 7 years or less as far as the market value. And it is crazy. And that's the thing, is if, the best time to buy was yesterday. That's the big thing, is most people getting the idea like, oh, it's got to be a perfect house. No, you need to get a starter house. You know what I mean? You think
that exists, but yes,
if it does exist, exactly. Yeah. But the starter house to save, to get into it, it doesn't have to be your dream home. So I have stupid friends. I don't want to say even count them friends anymore, but friends that went over and bought and overpaid and it's all the bells and whistles. I'm like, your parents never had anything nice like that. You're really shooting off the hope you can afford it. And now that's gone to foreclosure, or they had to walk away from it because they literally just can't keep up with that. The cars, the student loan debt, and everything else there. You have to be smart. I almost want to say it takes it back to lack of financial education out there in a lot of cases, how decisions from college and graduation are going to affect you in the long run, longer than you expect.
Yeah, no, 100%. I want to be clear. Like I do this. I tell my kids this a lot. I am very, let's say I'm, conservative liberal, but I'm a pretty liberal person when it comes to understanding people are in situations that they can't get themselves out of, that they were born into, it's kind of like the race. I started at the starting line and you started 15 steps behind me. Okay. Yep. So that exists. That's a real thing. Okay. And it exists all over the country in a lot of different situations. However, that being said, your situation is your situation, and you have to figure out how to navigate out of that. And as a society, we don't do a very good job of educating our kids and educating even adults on simple financial basics of what interest is, what it really means to you in the long term, and putting it in people understand. Like I use this analogy of, like you hear about people in other countries starving for food, right? Like in Afghanistan or Africa or certain parts of where they don't have food, right? And that exists, and that's real, and you've seen it on TV, and fine. But until you physically go there and you physically see it, it doesn't impact you the way it does in that situation. So you can sit a 12-year-old down in a class and you can explain to them about checking accounts and interest and blah, blah, blah. And they're just going to sit there with a glazed thing over their face and not care about it. You have to create environments and situations where real world occurrences impact people to say, hey, look, this is what it does. If you buy these pair of shoes on your credit card at 20% interest and you don't pay that off in the next 12 months, it's 3 times what it costs you to do it. Is that worth it to you? And sometimes until they even feel it, they don't know it. So it's like, yes, there are circumstances where people get a raw deal. It happens all the time, but you are what you are, and you have to figure out how to climb your way out of it. And the only way to do that is through education, through learning by sometimes making mistakes, but learning from those mistakes. That's the other thing is people do stupid stuff, me included, do stupid stuff all the time. But I have to learn when I do things that were a bad decision and then not make that decision again. And that unfortunately is, whether you want to call it accountability, whether you want to call it, our parents not instilling in us those values, whatever it is, there's a disconnect there. And I think it's affecting everything overall. And is this going to be the first, I mean, damn to the boomers, but this is going to be the first generation, I think, of kids that aren't going to have the same standard of living that their parents did. And it's terrible.
It's totally terrible, but it's a sure sign that the system is broke and has got to be fixed in some sort of fashion. I'm a big believer that, I hate to say this, but one product thing about buying a home, one product that I thought was creative, but also very negative, not for the right person, would be like a negative AM, like what happened years ago where people are making partial payments in an appreciating market.
Yeah.
To make it more affordable for stuff, but refinancing into something more affordable after a period of time so that you're not running into that when the appreciation is gone and 125% of loan to value,
and
then then you're upside down. I'm also a big believer that folks out there, besides taking down the notches of what they want in a perfect home, cohabitating, maybe buying with two families to make things a little more affordable, and go on that route for a period of time until both are ready to rock and roll and own their own thing.
Well, I agree with that, and I think our culture in the United States is a lot different than other places in the world because I was raised, especially where I think it is changing, but I was in an environment where it was like, okay, you graduate high school at 18, you go to college for 4 years, you get your corporate job, and you go out there and you make something of yourself. And if you have to move home, then you failed. Like that was or at least that was the mentality that I had at that point, was like, this is what is happening. But when you look at cultures across the rest of the planet, a lot of places you don't move out till you get married, right? Mm-hmm. You don't go anywhere until you find a husband or a wife, and then you move out. And then, oh, by the way, when your parents hit a certain age, they're moving back in with you, and that's just what's going to be, right? And there isn't any like, oh, we're going to find mom a home. It's like, what? No, you're not. She's living in your guest room in the family house that she bought that you're living in now with your family, and that's how it works. And look, there are drawbacks and pluses to all different types of things, but the idea that we have always lived in this culture where you have to go, hustle mentality, success, it's good. But at the same time, it's okay to live at home with your family for a little while you're going to school. It's okay to stay with mom and dad while you're working on your job because you can't quite get to that. Those are all things that everybody else does, and we've just frowned upon it for so long. Again, I think it's changing, but that's what it's been. And even school now, right? I tell my kids today, and we talked about this, I think, before, but if you're not going to go to school to be a doctor, a lawyer, some sort of professional degree, right, where you need that certification in order for you to do that job, engineer, whatever, then is it worth $250,000? I don't think it is. I mean, YouTube exists. Go check it out, right? You can learn anything you want. So all of these things are impacting what's happening, and what's crazy is, being in housing, it's like, well, these are broad subjects. It is, but all of this stuff impacts my day-to-day business as it impacts your day-to-day business. And you have to be aware of these things that are happening and know what's going on, because that's the only way you can plan for what you're going to do.
Mm-hmm. One of the things too, I wanted to ask you about, my kind of the trends we're talking about, is the move for more folks and the newer generation liking maybe the more tiny home aspect of things. Mm-hmm. I know it's hard to make money on $100,000 loan when you look at maximum costs and things that you're allowed to put in there to figure in the APR and stuff like that. But are you seeing more of that where people are looking at buying smaller houses? How easy are those to get financed in it, like versus a traditional 3-2, 1,500 square foot house?
As you know, everything is about comps, right? Yep. So it's like we get in Texas here, we get a lot of I want to build a barn dominium, right? I want to do a barn dominium. We get that. Yep. I get that question once a week. Can we do a barn dominium? Well, the answer is always if there are comps that support the value of that, if there are other ones in that area. Okay. So it's the same principle when you get to the tiny houses or the ADUs or anything like that. It's like accessory dwelling unit. That's an ADU.
Yep.
For anybody that doesn't know. And so when you get to those new types of homes, it very much comes down to, well, can you comp it out? Now, are lenders going to be diving into the tiny home construction and trying to give you a 800 square foot house that's $70,000 on a $50,000 loan? Probably not. And the reason for that isn't because, well, banks are greedy. I work for a bank. We're greedy. It's just what it is. Okay. But that's the main reason. Second reason is that there are actual regulations to where, as a lender, Fannie, Freddie, typical style lender, there's only a certain percentage of the loan size that fees can be charged. Right. And so if I'm buying a $300,000 house, the appraisal is going to cost me $600, $500. If I'm buying $100,000 house, the appraisal is going to cost me $500 to $600. It's the same amount, even though the house is significantly more expensive. So that amount, that percentage of cost that we can put into a loan gets eaten up very, very fast when the loan is small. So, it's not that the bank doesn't want to do it. It's just that they can't, they're not allowed to. And so, so you run into issues there with smaller financing, but the bigger issue is that you don't have builders that are willing to go all in that, because everybody, and again, capitalism's the best system in the planet. But if you can't make a certain profit, there's no incentive for you to get in there and build that home. So heck, to me as a lender, I want to do loans because I want to create a relationship. I want to do, I want to get your checking account. Like you said, they want that relationship. So there's a lot of avenues where banks will be like, I'll lend you on anything if I can get other parts. Right. But as a builder, if I can't build 100 homes and my 20% margin is only 20 grand, or I can go build a $500,000 home and that same margin gets me, 100 grand. Well, which one am I going to do? Right. Which one? And I think that's the bigger issue, is that it's not that the lending is tight or difficult on those, is that there isn't a lot of builders that are out there trying to create that market. I had this crazy idea in my head a long time ago when the tiny home thing really kind of hit the scene, where, I was thinking, okay, what if you bought, 3 acres of land and you did it almost like a mobile home park to some extent, and you created this little community. You've got a garden and a pavilion and all these things where these little tiny homes could be on, and it like a retirement, like these are only for people over the age of 60. These are a younger one, these, I don't want to call it a commune, but it's kind of like,
it's kind of like that. Yeah.
But that very much could be something, that could be a thing in the future. That it's just, it's anything else. What are the incentives? What are the incentives for the people that are going to put that infrastructure in place? Where's the profit centers for them to make money at it? Because if it's not there, then they're not going to do it. And that's everything. That's not just housing. That's, what, I can't remember the saying. I was trying to think of it. It was like, ask me for a behavior or show me the incentive and I'll show you the behavior, or whatever that saying is that talks about that. But that's what all of this stuff boils down to. It's like affordable housing needs to happen, but how do you incentivize it to happen?
Yep. Now, let's kind of twist a little bit here. If somebody's, how much are you seeing too with sellers being willing to give incentives to reduce the price, giving incentives to buy down the mortgage rate? Are you seeing an increase in that in what you're seeing on a regular basis?
So obviously builders are doing that because builders are very much vertically integrated. So they have, lenders, title, they have it all in-house there, and they're all basically sharing in the profit of that home, right? You're paying more for that house, or they're building that into it. So builders are built. I mean, in San Antonio, I saw something the other day. It's only in select areas, but DR Horton was offering like 4.25% on these homes in San Antonio. I don't know the quality of the house. I don't know anything about it, but I saw that. So some of the builders are doing that already. The sellers, like the average seller, it always depends on the market, right? It depends on what, if I live in Mansfield, Texas, and it's a fairly desirable part of DFW, but let's just say maybe someone's heard of Frisco or Plano or North Dallas, Allen. If you're buying a house up there, those are $500,000, $600,000, $700,000 homes. They're still getting 2 and 3 offers because there's no houses there in those areas that people are desired to move to. If I go to say Burleson or Crowley or, some of these South Fort Worth or out a little bit more, and if the house has been sitting for 2 months or 60 days or whatever, well then, they're going to be more willing to, throw something into that deal. And by the way, if you're thinking about buying anything, I always recommend getting the seller to pay you money, not take off the price, because taking off the price, 10 grand is going to save you $65 a month on your payment. Having them give you $10,000 in closing costs, seller concessions, could be used to buy down your rate, or could be used to pay the 10 grand in closing costs that you're going to have to pay out of pocket. That saves you that money today, right? So that's a way better use of that money. I personally, and this isn't, I always tell people this when I recommend the stuff about buy downs. There's two types of buy downs: permanent and temporary. Okay. Temporary is less expensive. You could get a 2-point buy down on a temporary buy down for, say, for 2 or 3 years, depending on how you do it. If your rate is 7%, you can have 5 for the first year, 6 for the second year, 7 for the third. And that, if it's a $300,000 house, maybe that costs you $3,500. Okay. That's a reasonable cost for a short-term solution. If you want to buy that rate from 7% to 5% on a permanent buy down, well, that's going to cost you like $30,000. Okay. Because that's the interest that the banks can make it over the life of the loan. So I am not a big buy down person as far as like suggesting and selling, because I think rates are fluid and change and adjust. And I can't predict what's going to happen in a year or 2 years. And so I would rather take the cash today and save my cash and use it for closing costs than I would to buy down the rate. But if that's what you want to do, that's what you want to do. And there's certainly an appetite for it. It just like anything else, it depends on the market, where the house is, and the seller's desire to get rid of that house.
Amen to that. Amen to that. All depends on the situation, but some options are available for folks out there that need to get their house moved in some different ways that to make it more attractive to buyers.
Yeah.
Are you doing loans just in Texas, or are you doing them out of state as well, or just in the Lone Star State for the most part?
So I do primarily in Texas. I'm licensed in Louisiana. I have a branch in Indiana. We have one in Arkansas. So there's a couple other places, but for the most part, I personally do most of my loans in Texas, just because it's not that getting out of the state is a bad thing. It's just that it's limited, and it does cost, money for us to be licensed in those states. So you got to be able to justify the contracts. And so much of our business still is very much agent referred. So, if we have realtors that we work with, and, agents, if you've worked with them, are, not all of them, but they're a little fickle. And so if you can't be in front of them, pretty regularly, and a new pretty girl walks by, a new pretty lender walks by, they'll tend to move back and forth some, and they come and go. But so it's difficult to keep and sustain a business outside the state if you're not physically there, because of where the business comes from. If you built your business around online leads, or you built your business around, referrals from like the divorce attorneys and financial planners, and you could keep a network that way, then yeah, it can make more sense for you. Or if you just have, like I had a little work for me for a long time, that she was born and raised in Baton Rouge, and that's where she knew a bunch of people, but she moved to Dallas. Well, she did most of her business in Baton Rouge because she knew everybody there. So it all just kind of depends, but I primarily stay in Texas.
Nice. Good stuff. Now let's talk a little about your podcast, the Texas Real Estate and Finance Podcast. What's been your biggest surprise since you started that show?
The amount of work that it takes, honestly, it takes a lot. And, you have to be careful, or I have to be careful. And this obviously, because you've been doing this longer than me, but, and have a way bigger reach, but I got to be careful on how much time I spend on it versus how much time I spend actually on what I would call money-making activities. Right. Now, this can be a money-making activity, and it certainly can develop that way, but I feel like you have to have a real enjoyment for it. You got to like to do it. You got to be comfortable with it in order to do it well. Because I was telling somebody the other day, so when I first started doing it, I did my research and I went online and I was like, all right, what other, first off, it was like, make the name as simple and easy as possible for someone that's trying to find you. So I was like, okay, I'm going to talk about Texas real estate and finance. So, I'm going to give it, like, it's not like talk to me and here's how it goes, and this is the go show or whatever. I just like, I got to make it simple. And then, so I went online and I was like, all right, how many podcasts are there that are about real estate, that are in Texas, that, kind of do what I do? And when I go to Google, I look it up, and there's a bunch, there's quite a few. And so I was like, okay, well, let me see what they do. And then I go to those sites and I start looking, and they've got 6 episodes, or they've got 20 episodes, and they filmed 10 2 years ago and 10 in the last 6 months or whatever. And I couldn't, still really find very many that had more than maybe 20 or 30 episodes.
Yep.
And so I look up 2 years later and I'm at 130, and the consistency of doing it every week and creating a process to it has really made it easier to do, and more and more. And I get good feedback from audiences, and we've had 4,000 unique listeners and all kinds of great amount of downloads so far, and it keeps growing every day. So I'm really happy where it's going, and I'm getting bigger and bigger, guests to appear. I got you to come on, which was awesome. And then, I had the managing editor from Housing Wire on today, which was great. So all of that stuff has been really great, but man, it is a lot of work, and you really got to be committed to it, because it's one thing to sit down and have a conversation with somebody and talk about stuff, because that's fun. And I love doing it, and, I enjoy it, but it's a whole other thing to use it as an outlet to try to grow your business. And that requires, a lot of time and effort to it. And that's the part I've learned a ton. Like, these days I could put on a masterclass on how to do a podcast and promote it and all that kind of stuff. But that's been the biggest surprise, is just how much work it took.
Yeah, I mean, I agree. There's definitely some work, and congratulations on 130 episodes. That is phenomenal, because you're right. That puts you honestly in some rare air out there. So many folks are flashing the pans, 20, 30 episodes, and you're doing some great stuff, great guests, great content. And I think that's what people really need right now, is people that are in the shit. You're in the frying pan right now.
Yes.
Too many people aren't in the frying pan.
No, I get asked all the time when we bring on, it goes back to because I recruit loan officers too. Yep. And they'll say, well, are you still originating? And I'm like, yeah, I always originate loans. I don't do as many as I used to, but I do. Well, nobody's doing as many as they used to, but I'm not trying to do as many as before, because I'm trying to build a team bigger, but I'm never going to stop doing loans, because you have to be in the mix. You have to know what's happening on the ground every day to really have perspective, and not sit in some, ivory tower where you have a bunch of minions doing everything and you don't really know what's happening. It's like, you have to sit down and evaluate every deal that comes across your table and look at all of the metrics, for these different notes that you buy, and say, okay, I know the area here. I know what the median income is on this place, and what the chances are that market going up, and who this, profile of this borrower is, because I've dealt with them in the past. But if you don't do it, it's like a muscle. If you don't continually work that muscle out, then it atrophies, and you're not as sharp with it. And so you have to do it. You have to get into the muck, and you have to do it. And then being able to share that experience with folks, and ask people questions that really matter, and not just the normal, like I had somebody one time when I first started doing it that were like, I'm so excited to be on your webinar. I'm like, this isn't a webinar. Like I'm not talking to the CEO of Coke. Like, I'm just talking to the normal dude in his car on his way to work, working, selling houses, and just trying to figure out what happened with interest rates, or, what's going on with this NAR lawsuit, or, what's happening with inventory in my area. Like that's the stuff that they care about. And if you're not in it every day and you don't see it, then it's hard to relay that message without sounding like you're fake.
Amen to that, brother. But it also helps you stand out. There's so many folks have gotten out of the business because they don't understand marketing. They don't understand relationships as an ongoing thing, and you're creating more relationships, more referrals, and stuff like that. I know that our podcast has become one of our number one referral sources, not only for deal flow, but also for raising capital and so many other things. So keep up the good work.
Well, and podcast isn't for everybody too. You know what I mean? Like, and that's the thing, because I work with agents too, and we talk about different ways to market your business and showcase yourself. And, they want to know about the podcast stuff. And I'm like, yeah, this is what I do. This is how I do it. This is, the methods behind it a little bit. But at the end of the day, that may not be for you, but there are other ways to market your business and put yourself out there. And it doesn't have to be, you don't have to dance on a video on social media, or you don't have to, host a podcast and talk to people all the time. There's many, many ways you got to do it. But the thing is whatever it is your thing is, like, lock in on that thing and stay consistent with it and do it. Because if you do, you'll become the best at that thing, because everybody else, and me, myself included, I've tried other things. I've tried, let me try to do this. Let me try to do this. And I start and I stop and I start and I stop and I start. And then eventually it's like, all right, I'm not doing that. And this is the one thing that I've been able to stick to and continue to do, and have done consistently, and I don't miss. And so I've gotten so much better at it. It's just reps. And so if you do it on a regular basis, if you make home tours, or if you do whatever it is that you think is going to be the best thing for your business, and you do it consistently, it will pay off. But it's not going to pay off tomorrow. It's going to take time.
No, it takes planting the seeds and letting those seeds sprout and continue to nurture them. Yep. What's the best way for our audience members out there to connect with you? whether they want to learn more about your podcast or they need financing to either refinance or to purchase their new home.
So our website is Mills Team Mortgage. It looks like Mills Steam Mortgage, but either way, Mills Steam. It's funny, but it's Mills Team Mortgage. Should have done that a little better when I made the two S's in the middle there. I'm on every social media platform you can imagine: Facebook, LinkedIn, YouTube, Twitter. I'm on them all. I'm relatively active on most of them. I feel pretty confident that if you Googled my name, it would show up on all those as well, pretty top, because I've made 130 of these episodes, make videos, talk to people all the time. That's how you can get me. And, what we try to do as a mortgage team is we specialize in hard loans. We do the rehabs, we do the non-QMs, bank statements, fix and flips, these times that are a little bit out of the box. Obviously we do FHA conventional and all the stuff. We do those great. But where we really shine is helping somebody with a not so normal situation and trying to figure out a product that's going to fit them. Sometimes we can't find it. But what I tell people is like, look, if I can't solve this problem, then it's probably not solvable. And I don't mean to be tooting my own horn, but we've been doing this a long time, done a lot of loans and have gone through these. And what I try to do is be honest with people and say, hey, look, here's why you can't do this. Here's what is affecting this, or here's why you can. But if you fix this thing or change that thing, or, give it 12 months or whatever it is, then you can get there. So at minimum, I'm going to be able to give you a path on how you need to get to where you're going to go. Even if you can't do it today, I will show you when you can and how you can.
Sounds good, bud. Well, check it out. The Mills Team .com.
Mills Team Mortgage.
Yes. Mills Team Mortgage.
Podcast,
exactly.
The Texas Real Estate and Finance Podcast. Again, as simple as it could be. Long, but simple.
That's all right. We'll put the links. So all they got to do is click on the description in either the YouTube or the podcast there for you. Mike, it has been wonderful. We're going to have to come back on as the market changes and with updates and good stuff. Sound good?
I would love to. Yes, please. I love having great conversations because we need more dialogue. And these days our section of the media world is growing. People are tuning away from the corporate media that's sponsored and telling you how to think and looking for people, that have different opinions and living in their own niche. So I think you're doing great. I'm getting ready to start my We Close Notes class soon because I'm very interested in that. So what you're doing is fantastic.
Thanks, Mike.
And I really appreciate you having me on.
Thanks, Mike. Well, we look forward to continuing the conversation today. So guys,
yes, sir.
Check it out. Definitely go out, take some action. Mike shared a ton of nuggets out there. If you're looking to buy, sell, refinance, give his team a phone call. They'll be there to help you out there and make sure that you're not making any money mistakes. So go out, take some action, everybody, and we'll see you at the top.
Thank you.